Hey everyone, Matthew here. And if you're holding XRP, buckle up, because today I'm walking you through insider-level insight you won't find anywhere else. We're talking about why the scarcity countdown for XRP starts now, and how you could be witnessing one of the most dramatic shifts in the history of digital assets. Stay until the very end, because what I reveal later in this video will completely change how you view XRP's future. At its core, here's the truth. XRP is entering a phase where supply is about to get squeezed while institutional demand is quietly ramping up behind the scenes. That's a rare setup, and when it happens in any market, whether it's gold, Bitcoin, or even commodities, it sparks explosive moves. Today we're seeing the early signs of this for XRP, and the data doesn't lie. Let's start with the big picture. Ripple's ecosystem is expanding faster than most realize. According to recent reports, a Ripple-backed company called Evernorth is planning to raise over $1 billion. And here's the key. They're focusing on hoarding XRP as part of their treasury. Think about that. If companies start locking away massive amounts of XRP for long-term use, that's supply being removed from the market. Less circulating XRP means higher scarcity, and higher scarcity means potential price pressure upward. Meanwhile, on X, several crypto analysts and insiders have been posting updates pointing out exactly that. One recent tweet stated, "When XRP's strategic use case is fully realized, it won't stay in circulation for long." That quote has been spreading like wildfire, and it's not hype. It's analysis rooted in fundamentals. Ripple's partnerships, real-world utility, and upcoming integration into tokenized asset systems could drive a demand surge that drains liquid supply faster than most expect. So the question you should be asking right now is, are you prepared for XRP to transition from being just another altcoin to becoming the infrastructure layer for the next era of finance? Because whether you believe it or not, that transition is already in motion. Let's break this down. Point number one, institutional momentum is building rapidly. Ripple has been laying the groundwork for years. Deals with central banks, private financial networks, and fintech providers are quietly stacking up. Now that regulatory clarity is approaching, large institutions are finally confident enough to move in. We're not talking about retail traders chasing candles. We're talking about billion-dollar funds setting up strategic positions. Just imagine what happens when these institutions start treating XRP as a core liquidity asset, using it to bridge cross-border payments and settle tokenized transactions. That demand doesn't just buy XRP, it locks it. And once it's locked for utility, it's effectively out of circulation. Here's the second key, supply dynamics. XRP's total supply may seem large at first glance, but circulating supply, the tokens actually available on the market, is what matters most. And right now, data shows circulating supply is shrinking. Millions of XRP are being moved into long-term wallets, escrow contracts, and institutional reserves. Even with a low burn rate, this kind of real-world demand acts as a functional burn, because those tokens aren't coming back anytime soon. Think of it like rare collectibles. It doesn't matter how many were printed decades ago. What matters is how many are still in circulation today. XRP's path is mirroring that pattern. Scarcity starts not when you destroy coins, but when the biggest holders stop selling and start accumulating. Now here's where it gets interesting, and this is where things get explosive. Real-time signals on X show that smart money is already positioning. There was a tweet last week showing a $3 million market buy executed in under a second. That's not a retail investor. That's institutional-level execution. These moves are happening quietly, before the crowd catches on. Another analyst pointed out that even though XRP's burn rate is low, the focus has shifted to something more important, utility. If XRP becomes a key player in the tokenized asset space, its daily transactional volume could multiply, and liquidity requirements will force higher valuations simply to maintain system balance. Let's visualize this for a moment. Imagine a world where XRP is the bridge currency for $100 trillion in tokenized assets, everything from real estate to stocks to commodities. Each of those transactions needs liquidity, and that liquidity is XRP. As more use cases go live, XRP held in custody, smart contracts and liquidity pools disappears from public exchanges. The result? Extreme scarcity meets unstoppable demand. Now let's do a what-if scenario. What if institutional holdings lock away even 40% of the circulating supply over the next few years? What if retail investors, realizing this trend, begin to FOMO in? What happens when the available supply drops, but everyone suddenly wants exposure? You already know the answer. Massive upside potential. But before you think this is just hype, let's address the skeptics. Some say XRP's total supply is too big for scarcity to matter. Wrong. Supply doesn't matter unless it's liquid, and the liquid supply, the amount actually being traded, is already falling. Others argue the burn rate is too small. That's outdated thinking. Burn rate is cosmetic. True scarcity happens when tokens are used for settlement, integrated into financial infrastructure, and held by institutions for compliance reasons. Once that happens, circulation dries up. And that's happening right now. Still not convinced? Let's talk about psychology. Right now, XRP is in the disbelief phase. Most investors have written it off as slow, stagnant, or underperforming. But historically, the biggest breakouts occur right after long periods of boredom and disbelief. That's when the patient holders, the ones who saw the setup coming, win big. And remember this, institutional investors aren't chasing momentum, they create it. They accumulate quietly when no one's paying attention. Then, once the narrative flips, they unleash the headlines. Retail rushes in. That's when the cycle repeats. If you're watching this now, you're still early. Here's my bold prediction, and I want you to really think about this. Within the next 12 to 18 months, we could see a reduction of 30 to 50% in XRP's tradable float due to institutional lockups, liquidity demand, and utility expansion. That alone could multiply the price by several factors, even before speculation kicks in. Combine that with a wave of tokenization adoption, and XRP could transition from undervalued to indispensable. I'm not saying XRP will hit $500 tomorrow, but if even half of this scarcity thesis plays out, XRP could easily become one of the highest performing assets in the next financial cycle. This isn't just another pump. This is structural transformation. So what should you do? Number 1. Know your conviction. If you believe in the long-term utility of XRP, hold strong and stay informed. Number 2, track the data. Watch on-chain movements, escrow releases, and institutional announcements. Those are your real signals. Number 3, engage with the community. Comment your target, share your perspective, and help the algorithm push this message out to other XRP holders. Because this isn't just about one person winning. This is a community. The more informed the XRP army becomes, the stronger the movement gets. And that's how narratives shift markets. In short, here's the takeaway. Institutional momentum is building, supply is tightening, and the world is moving toward tokenized finance faster than anyone predicted. The countdown to XRP scarcity has officially started. And every day from here on matters. If this opened your eyes or got you thinking differently about XRP, then you're exactly where you should be. Smash that like button, drop a comment with your XRP price target, and subscribe for more real data-driven analysis that separates hype from truth. Share this video with your friends in the community, because together we can make sure the XRP story gets told the way it deserves. I'm Matthew. Thanks for watching, and I'll see you in the next deep dive.